It's time to talk Melbourne property with this month's Listener's Choice episode.
Melbourne has some quiet trends, but some improving trends too.
Starting with the state of Victoria, zooming into the LGA, and then focusing on the suburb you guys have sent in.
Victoria's job growth now improved at 3.6%. And here's another really strong part, yields are
with our resident data expert, Arjun Paliwal, founder of InvestorKit, giving us the detail and the data you want to see in this area.
The net internal migration's been interesting. The bleed is actually getting less as the years go on. The 10-year growth average as well is above the Melbourne average. It's actually performed better over the last 10 years than Melbourne as a whole has.
What's the reasoning behind it?
It's hard to say other than the local market pressure trends. There's a few things that are strong, a few things that are weak. So in terms of the things that are strong,
if you're interested in finding out more detail about what's happening in the Melbourne property market, you're going to enjoy this episode. My name's Todd Sloan. This is the Pizza and Property Podcast. This episode is powered by Inside2, PDN, InvestorKit, and Property Strats. More about our show sponsors in the show notes below. But right now, let's jump into the chat with Arjun Paliwal.
Arjun Paliwal, it's listener's choice time again.
mate, it is. It's the good old weekly slices. I love these.
Man, I love this episode style as well. We've got an area sent in. We're going to be deep diving into that. But before we do, we're going to be talking about it from a state level, LGA level, and then going more so into the question. Now, the question's actually been sent in. And by the way, if you've got a question that you want sent in or an area you want deep dived in, link in the show notes below. Tell us as much as you can. Hopefully we'll make an episode for yours soon. But for now, we've got Shelben. Now, Shelben has sent in Pakenham in Victoria. Basically, he's looking for a house, but something that has really strong rental growth and capital growth to it. He's not just looking for one over the other, but this is something over the next 5 years, more longer term. He hasn't given us a budget. So are we just going to assume this is kind of sitting around that kind of like 500 to 800 sort of mark?
Yeah, I'd say sort of 600 to 800 these days.
600 to 800? Yep, cool. All right. So if you're looking around that 600 to 800 sort of mark in Pakenham, mate, whereabouts do you want to start?
Yeah, we'll start with Victoria. And at the moment, Victoria is getting some healthy population growth, up 2.4%. And that is the second highest, only second to WA, which is up 2.8. And that's as of the last sort of calendar year or last financial year ending. Now, in terms of population growth, mainly in Victoria, it is always overseas migration. But the net internal migration has been interesting. The bleed that was quite heavy for many, many years in Victoria, the bleed is actually getting less and less and less as the years go on. So the internal migration, while still negative, the departure is getting really, really low every single year, right?
Do you think part of that is like the affordability shift a little bit? Because it used to be Melbourne and Sydney were like the expensive places.
Yeah.
Now all of a sudden Brisbane's kind of caught up. Adelaide's kind of caught up to a certain extent. So it's like, well, wait a second. These cheaper places don't really exist the same way as other options.
Yeah, so Melbourne's deceivingly cheap. So what I mean by that, you still got $100 million homes in Toorak, right?
Yeah.
Yeah, and still the inner markets have some premium aspects to it there. But it's more like because it's such a spread city, because it's got a wide population base, you've got the far north, the west, the east, and houses over there are, built at pretty high quantities as well in some areas. You do get some affordable properties in Melbourne, and that's definitely helped it as well. Not only the affordable property values, but also the affordable rent values in comparison to some other cities, because the yields are naturally low in Melbourne. So yeah, that's been a case. But moving from the population size, unemployment, it is a little bit on the higher end, but still quite low nationally, being 4.4%, but just only high when I say that in comparison to national average, because it's so low everywhere. Victoria's job growth is improving. It's actually now improved at 3.6%, and it's only third to Queensland and WA, which have been really performing. So Victoria's job market is improving, and the gross state product as well for Victoria for FY 23-24 grew by 1.5%. It's not a standout number, but that is still higher than the national average at 1.4%, right? Okay. And also in the most recent quarter of data, CommSec State of the States has ranked Victoria up there and starting to improve. Now, yes, people talk about the state debt and all that sort of stuff and the compliance and bills. These things will get better over time, but right now factoring on just, gross state production, wage growth, the other factors that CommSec look at as well, it is starting to improve alongside things I mentioned of jobs, advertisements, which are starting to improve as well from that growth. If we're looking at the CommSec State of the State report in particular, that September ending quarter, Vic was ranked 4th, but it is starting to improve from that rank. And recently, Vic ranked actually 2nd for retail spending, with 9.5% higher in the September quarter from its decade average. And so if we look at Vic as well, Construction work is starting to improve too. From an economy level, it's 16% above the decade average. So there is a bit of life starting to come alive in some parts of it, but other measures would also suggest from the debt and the infrastructure projects that have been canned or overcosted, some parts of it are still weak in a few areas. That's Victoria's economy landscape. In terms of Melbourne now, if we're looking at that annual growth of Melbourne, the property market of Melbourne itself has been a little quiet as the whole city. The median house price was down 2.9% in 2024. And in terms of the rest of Vic price, it was down 2.7% in the rest of 2024. So all of 2024. And so the property market's quiet at a city level for the whole city. But as we're going to go into, there are pockets that are better.
And when you're talking down 2.9% for Greater Melbourne house price, you're talking like what that sort of 30K ring?
Just all of Melbourne, because Greater Melbourne extends pretty far wide.
Gotcha. Okay, so down 2.9%. All right. Is there anything else you want to talk about state-wise before we jump into the LGA?
Yeah, look, I think state-wise, it's had a bit of a rough run in some of the compliance and a few things like that. But remember, as we'll point out in this particular episode, you don't buy the state when you buy an investment property. My favorite thing is that you say you buy a property on a street, in a suburb, in a city, in a state, in a country, in the world. The list goes on. But I
wouldn't buy an Earth. God.
Have you invested in Earth of late?
Yeah, seeing what's happening there.
But no, look, I think the main thing here is that Melbourne has some quiet trends, but some improving trends too from the major city, and it's about getting now down to the LGA and suburb.
All right, and what is the LGA Pakenham sits in?
Yeah, so it sits in the LGA of Cardinia, and that's also the name of the SA3, Cardinia. Population growth has been healthy in terms of 3.21%. Internal migration is up 1.07%, but down a little bit less over the last year's measurements before then. Unemployment rates are stronger than the city average at 3.6%. And the 10-year growth average as well is above the Melbourne average. So as a SA3 or LGA, it's actually performed better over the last 10 years than Melbourne as a whole has. So it's been a performer over the 10-year growth periods.
And what makes you think it's done that? Like what's the reasoning behind it?
It's hard to say other than the local market pressure trends, because that's really what it comes down to. And speaking of some of the pressure trends, there's a few things that are strong, a few things that are weak, right? So in terms of the things that are strong, their vacancy rates are low, and that's at 0.58% at the LGA level. Other things is that median price is affordable. The median price of the Cardinia LGA $695 versus the Melbourne median price of $850.
Yep.
And here's another really strong part. It's the rental market. Yields are 4.37% there, which is like, the major parts of Brisbane and Adelaide and even Perth in some parts. And that's
pretty
healthy.
Good for Melbourne.
Absolutely. And with that yield, that's actually improved by 10% over the last 12 months because of the fact that prices haven't been grown much, but rents have. In fact, the rents have grown 11.1% over the last 12 months. So there's clear rental boom happening in this area still, and that is improving the rental yield. So that's the strong parts.
What's your thoughts on a lot of investors selling out of Melbourne, reducing the rental stock, which is one of the reasons it's actually starting to push up rents now?
Absolutely. That's one of the core reasons. It's actually also going to be the catalyst for one of the big reasons why the next boom cycle comes. Because what happens when cities go through a huge reduction of rental stock is this mass flow-on effect. Investors see yields rising. Investors see it's one of the few states that hasn't grown for many, many years. And for tenants, not all of them, are the ones that are considering buying. They do think of, well, my rents keep going up, but my prices haven't. So they are a little bit more motivated.
Yep.
And so I just think that the rental yield can't be underestimated as a partial driver of growth. When rental yields start increasing, we start to see a lot of pressures return because of that audience that gets attracted to buying.
If you can mix affordability, Melbourne, and good rental yields together, like you're already getting a pretty attractive sort of play there just on those three.
Absolutely. I guess that's one of the strengths, right? The only weakness I'd say here, though, is inventory still a little bit high at 4.8 months in the Cardinia SA3.
Yep.
And days on market has increased a little bit. But these things are common in markets that are earlier in their cycle because they represent better buying conditions.
4.8 months, obviously that is a lot higher. Is that tracking down though, or is that still going up, or is it steady?
It's still tracking up. So over the last 12 months, it's increased. Okay. I think the key thing here is to mention that it's increased from a balanced level to a less balanced level, a bit of an oversupply in some parts. Not all parts are showing that oversupply though.
Got it. Okay. Is there any other negatives then on Cardinia as an LGA that you wanted to really put forth?
I think as an LGA, there are some suburbs that have enough data, but then there are some suburbs in this area that are fully getting built, like as we speak, just completely new patches.
Right.
And so then what happens is that you might look at the data and you might not get the clearest picture. Inventory levels can be actually unintentionally increased because on real estate and domain, when you're looking at online listings, there can be listings of many like images of developer sites, but they might just have 5 different designs saying lot 1, 2, 3, but it might be the same lot, but just different designs. And I've seen sometimes this occur where you just have lots of like packaged home designs, but that doesn't represent all the lots or all the things that they're selling. This is them just trying to put their stuff out there. And I've seen in circumstances like that they may create a false reading on inventory and really the established market is moving quite strong. But I think the main negative is that there are some suburbs that are literally being built. So like you want to just be mindful of which pockets that's in.
That's fascinating. Okay, so you're basically looking at it going, the data is reliable, but kind of unreliably reliable.
Yeah, in a few patches.
Yeah,
Just
okay.
a few patches.
Got it. Is it time to jump into Pakenham as a suburb, or is there anything else you want to unpack on the LGA?
Yeah, let's jump into Pakenham as a suburb. So if we're looking into inventory, it is better than the SA3 level or the LGA level. Inventory is at 3.1 months. That is trending a little bit up though, but so it's still healthy though. It's not a high one. It's not a very low one. Days on market is quite low at about 20 days, although it's increased around 10%. But look, let's not jump too crazy at 10% because that's 18 going up to 20. So it's nothing too crazy there.
20 days is pretty good for inventory of 3.1 as well, isn't it?
Yeah, it's good. Inventory's balanced. Days on market's fairly low.
Yeah.
Vacancy rates are low at 0.9%, but they are increasing a little bit, but still just a very low base. Median prices are more affordable here at 650K, and yields are really strong at 4.42% with rental growth around 9.5% in the last 12 months.
And how far are we from the city in Pakenham?
We are pretty far. This is like the far east. So I'd say it's like the ends of Melbourne or Greater Melbourne. Some even consider it as its own zone, like as in it's its own area and you go out to Melbourne once in a while.
Like a Melton kind of?
Yeah, exactly. So I'd say like if you're no traffic off peak, you might get there in 55 minutes. But then if you're adding in some traffic, it can extend up to an hour and a half and some days even longer. So I think the main thing is being mindful that it's, yes, a part of it, but it's more like, okay, we're in the far parts, we've got our suburb. And that's the thing you've got to respect with Melbourne. It's such a big city like Sydney that you may actually have a house in your suburb, work from home or work in that suburb and just be there. Like that's it. Like you might go to the city for occasions. You don't go there because you have to. And I think that's some of the things to think about when it comes to these major cities, that you've got major rings across different parts. And also with this eastern area, you can head out to Mornington Peninsula. You're on the eastern sides being Pakenham in its own area. And then, of course, you go further in if you're going into town, which is a bit of a drive.
So as far as Shelben's question then, if he's looking for a house, both rental growth and capital growth, and he's looking at planting the seed for the next 5 years, I mean, straight away, I'm already looking at this going, Victoria very much being in that kind of emerging early adopter market. If he's got a much larger timeline, like a 5-year window, it's already probably looking a little bit better for him. But if he's looking for that rental growth and the capital growth element, how is Pakenham kind of shaping up for him?
Yeah, it's shaping up as a go for me. I think if you're looking at all the criteria you said, I'm early in cycle, I'm looking for 2 up to 5 years, looking for good rental growth, yield. Those are all the criteria it's ticking. It's balanced on inventory, it's early in its growth cycle, it's having a healthy rental yield, rents are rising, you're getting modern homes, you're fitting in that price point, and eventually it's going to come around with the Melbourne cycle, and it's already starting to show some early signs in that eastern area from Berwick out to sort of Pakenham. So I'd say that, yeah, look, it's a go for me.
You and I have talked about this before, about buying like development potential, but never actually doing anything with it. And it can kill your yield. You can just have like more like equity locked up and that you're not using sometimes. Is Melbourne any different for you? Because Melbourne is very much like there's a lot more townhouses. There's a lot more like uptake in that kind of apartment living. Is investing in a larger block of land in an area like Melbourne for future development potential any different at all for you? Or is it still like, nah, you're either developing or you're building your portfolio?
No, look, you can still have that in the mix. I think I've always been fine with it, but the main difference is that if someone's actually going to do something with it.
That's
right?
what I mean. Yeah.
Yeah. If someone's going to do something with it, then yeah, Melbourne offers that opportunity because you've got that zoning that'll allow for cutting up land a bit more since it is a bigger city with a denser population.
Yep.
And then secondly, it's like, hey, it is going to go through a growth cycle, but you just got to make sure that you don't, miss, like, the lion that's sitting on the side and all the buffalo just keep going past and it keeps missing every single one, and it doesn't do anything.
Yep.
You don't want to be like that in a market that's going through a cycle just because you want that. And then eventually when that cycle kicks in, you're trying to get into it, you got your site, but you paid $100,000 more than you should have because You just kept sitting there waiting for that right one. So that's the kind of thing I'd say to anything development potential. Yes, Melbourne's great for that because it offers, that zoning, that high population. It offers that land size in some of the more established areas. But yeah, you just got to be actually willing to take action at it, because if you're just doing it for the sake of holding it for that potential, the main thing is who's going to realize that potential? Because the whole time that you're waiting for that potential, you've got low yields, you've got maintenance to manage, rental compliance to manage, things to upkeep. And so that's the things to worry about.
Okay. So it's not that it's a no, but it's more of a, if you're never going to do anything with it, it's still potentially going to hold your portfolio back, but there's a lot more options in a denser city.
Correct.
Got it. Okay. Now I've got to ask the $64 million question. We're recording this like early 2025. I think it's like Feb at the moment. Actually, literally Feb. What do I mean literally Feb? Like Feb the 1st.
Hypothetically Feb.
Hypothetically Feb. When are you calling Melbourne to start moving? Is this something that you're still looking at through a longer lens of like this is 12, 24 months away, or are you maybe expecting something sooner?
Well, actually, it's already happening. It's just happening in the more affordable rings, and the macro data for the city is not showing it. Like you won't be able to look at a core logic indices for Melbourne and go, Melbourne's growing, right? Because it's not. You saw the data for the last 12 months. It was down 2.9%. But if you're looking at that sort of sub 800K ring or even 750, they're already picking up quite heavily in the far north and east as an example, and some pockets of the west. The main thing there is that it's already happening. So it's starting. It's not like you're late to the party. It's early, but it's starting.
Okay.
So that's my thoughts. And in fact, I think we were the first to call it in mainstream media. If you just search up Arjun Paliwal Melbourne, AFR, those three letters together, you'll see, I think January last year, I said, hey, it's going to be one to look out for. And over the coming year or two, it's going to start. So it's starting now.
So the party's not too early. The music's on, but it's not loud. No windows are broken yet.
Absolutely. The music's on. It's starting. It's about to be a good night. all that sort of stuff. No, it's starting. It's just more the affordable ring. I think you'll see some interesting signs as interest rates start coming down. Upsizes start picking up. Seeing some auction activity start to increase in a few places too. So I think it's that middle and upper ring that needs to dance along. And so I'm using this party theme way too much now. But they need to dance along for the whole city to start showing it at a major data provider level. But like us, when you're able to scan all the suburbs and LGAs, you can see some are starting to pop off.
Just moonwalk all over them.
Yeah. Or a bit of the worm, whatever you prefer.
I like the robot. Anyway, I'm going to leave dance metaphors. Mate, so it sounds like it's a go for Shelben as far as Pakenham's concerned, as long as he's going for a house, not a unit. We didn't even dive into that, but I know that you're very much not a fan of units. We've talked about this on your show as well. So Shelben, if you're looking into Pakenham, mate, I'd say this is definitely somewhere where it's worth investigating further. If you're looking around that $600,000 to $800,000 mark, you're potentially going to get a pretty decent yield, especially considering it's Victoria, and also some pretty good value in an emerging market, depending on how well you buy. But like I said at the start of the episode, if you've got an area that you want potentially having an episode made around it, click the link in the show notes below and tell us as much info as you can on it. But mate, otherwise, are there any final words of wisdom you got here, Arj, for this one?
No, I think, we've said it before around Melbourne's and time, and I think this is one of those lower quartile priced areas that are starting to show some growth, and it's happening across a few pockets. And good news is you're not too late to any cycle here. It's just early days, and it's starting. It's at that phase now where crowds are starting to build, offers are starting to come in, but prices aren't going too ridiculous.
I was at auctions in July last year, and there was literally like no one there.
Absolutely.
Like, it's changed a lot already.
Absolutely.
Yeah. Arjun Paliwal from InvestorKit, thank you so much for jumping on the show, mate. It's a pleasure as always.
Thank you so much. Cheers.